Welcome everyone to the Day 2 keynote of the 25th Annual ARC Industry Forum. This year's theme is Accelerating Digital Transformation in a Post-COVID World. In the spirit of doing this during a global pandemic, the forum is being held virtually this year, of course. My name is Mike Guilfoyle, and I'll be the host and moderator of this keynote session. This is a 90-minute long session. We'll start with a presentation, then hold a Q&A with a separate panel. Before we get started, I have a few tips here for optimizing your viewer experience of this keynote. Shut down extraneous apps if you can. Computer audio tends to transmit more clearly. If you'd like to submit a question to a panelist or speaker, please use the Q&A function in the control panel at the bottom of your screen. And though we are virtual this year, there are still plenty of options for doing what makes this forum so special, networking with and learning from your peers. To do so, you can connect with attendees a few different ways, as listed here. Additionally, you can see here some of the topic-specific chats that you can join. So, just a little bit about me before we jump in. My perspective, which you will see in the keynote session, is focused squarely on business strategy, specifically in reaction to market disruption. At ARC, I lead our research in analytics and other emerging technologies, such as cloud platforms. I'm also the practice lead for our new Vanguard service, which helps senior level end user executives target and overcome their company's specific digital transformation barriers through peer-to-peer interactions with proven industrial innovators. And now to the forum. As mentioned, this year is a little different. We broke the forum into 3 parts. The first, which is what you're participating in this week, focuses on industrial innovation and digitally enabled change, as well as cybersecurity. Next week, the forum will cover supply chain and smart city topics. So far this week, we've seen some really interesting activities already. On Monday, our end user community, the Digital Transformation Council, voted on research priorities for 2021. And it's always interesting to see where people want to focus for the coming year. The same day, we had some great workshops around another key topic we focus on this week, cybersecurity. On Tuesday, our keynote produced a fascinating and very timely look at vaccination production from Bert Vander Elst of GSK. And we have much more to come today and tomorrow, including some of the topics you see here. So let's jump into it and set the stage for this keynote and panel. No matter what anyone says, and even with many here that have plants abroad, including in China, no one really saw this coming in terms of the comprehensive impact produced by the pandemic. While there are a few US-centric stats here, there are also many data points out there that present a similar global picture. Contemplate it for a minute. 40% of the S&P stopped giving guidance at some point last year. Industrial production last year was down almost 17%. And we had 600,000 fewer manufacturing jobs in the US in 6 short months from April to October. That's nothing short of staggering. We've talked about it, but here it is in all of its starkness. This is what complete disruption looks like. In dealing with this disruption, though, we learned a remarkable amount about ourselves as nations, regions, industries, companies, and individuals. Looking at it from an industrial standpoint, it was a mixed bag of both good and bad, frankly. We've often talked about disruption, but what we usually were referring to was a slow build followed by a quick and dramatic disruptive tipping point. In this case, the build and drop were lightning quick and severe, though in sometimes oddly uneven ways. Many of those test the water digital transformation pilots simply collapsed. Under the harsh glare of the pandemic, they weren't low priority. They were exposed as having no priority. On the flip side, I saw an immense shift in how people began to think about all this digital technology. There was finally context for how this technology can support, in this case, unequivocally obvious business need, like remote work or fewer in-plant employees. Truly, necessity is the mother of invention. Companies were forced to quickly reset their business objectives, and those that did it well were able to galvanize employees to a sense of purpose. That's good leadership. And now, as we get closer to the light at the end of the tunnel, we see what we often don't get to experience. People are resilient. What this year did was force us to understand that change is a constant, and that this transformation we are going through is both necessary and good. For me, this quote from the World Economic Forum sums it up for many, and particularly for industrial markets. ARC wasn't exempt from the pandemic, and we too examined our role for industry as our value came into sharp focus. In particular, these three questions were asked of me over and over again by clients. In light of that, we vastly expanded our Digital Transformation Council community as hundreds of new members joined, and the DTC began focusing on specific geographies like Asia, as well as verticals such as smart cities. We created our Vanguard service this year, designed to be specific to a company's challenges, and with the aim of connecting executives who are still working through initiatives to those that have succeeded in doing so. Clearly, the human need to learn and share was evident, and it is something ARC continues to support in all the ways the market needs us to. And while many focused on the worst of the year and the need to simply get through it, the power of industry was clearly on display. When history looks back, it will recognize a moonshot. In terms of saving so many lives so quickly, the development of the vaccine is clearly a modern-day moonshot. It's a remarkable study of all the things that need to happen to create the exceptional. Collaboration. Vast amounts of research data were collected and shared on coronavirus structure, genomes, and life cycle. Coordination. That research was fast-tracked safely so clinical trials could be established within months of the outbreak. In fact, genome sequencing was done 10 days after the first reported case using mRNA technology, supported by machine learning applied to the data. Creation. The vaccine was created due to the investment that occurred across national boundaries, and the speed was nothing more than breathtaking. Here are a few other comparison points for the vaccine development. Smallpox, 154 years. Yellow fever, 19 years. Polio, 18 years. Typhoid, 13 years. Influenza, 9 years. And mumps, 4 years. This is the power of modern industry, galvanized to purpose. Ultimately, for industrial companies, 2020 will leave a profound impact, echoing long beyond 2021. These impacts include improved confidence in the power of people to identify, react, and adapt. There's no hiding or hedging anymore. Business agility is simply necessary. And we also learned it's definitely possible, despite the naysayers. As mentioned, necessity is the mother of invention, and that lens helped drive a much better understanding of modern technology. People and skills must shift. We aren't converging them. We are, in many cases, fusing those skill sets. And in today's world, you just can't do it alone. However, there's one thing I personally witnessed that brings us to the subject at hand. This year proved out what I had glimpses of in past years. There now exists a great digital divide, a vast gap between the innovation haves and have-nots. When it comes to digital transformation, those that are winning and succeeding are doing so because they view it as an exercise in competitive advantage, moving efforts well beyond operational optimization. These leaders have been at it for a few years now, understanding that they need to learn and build their digital wisdom. And that wisdom has translated into a digital backbone their competitors simply don't have. And this is how they apply it. Digital transformation doesn't occur unless it can be connected to some external market or customer signal. By doing so, the company understands the differentiating value of the change they're contemplating. Because this value is obvious and differentiating, the company not only commits to the change, they understand exactly what needs to occur. Since that change is well understood, it can be communicated across the company, bringing a transparency to where it will happen, how, and what the outcome will be. And since incentives drive human behavior, the company aligns those incentives with those objectives. Finally, the company has a willingness and humility to know they don't know it all. If they did, they would already have all the answers in place. So they look outside their existing ecosystem for ideas and knowledge. This approach, beginning with competitive signals, looking outside the company for new ideas, and then finding a way to commit to and communicate what change needs to happen and why, that's the driving strategy behind those winning in the market versus those inevitably getting left behind. With that in mind, I want to introduce our keynote speaker, Andrew Obin, Managing Director of Bank of America. He'll share with us Wall Street's perspective of industrial innovation, including how investors are placing their bets based on the year that was 2020. Welcome, Andrew.
Yes, thank you so much. So I'm Andrew Obin. So my background, I've been covering industrials for 25 years almost, and I've been at Bank of America almost and predecessor Merrill Lynch for 20 years. So that's what I've been looking at over the past decade. We increasingly started to look at software and how software impacts industrials. So hopefully you can see my presentation. What I'm going to do, I'm just going to sort of put software and industrials in perspective and just focus on what has been happening and how the events, the pandemic events, have accelerated trends that we have had in place for the past decade. So let's start it up. You have my presentation. So the first one is, look, it's software as a percent of total spending by U.S. manufacturers. And last year, we were highlighting it. Look, one of the big themes is software spend overtaking hardware by U.S. manufacturers. And we would expect 2020 to be even more dramatic. Mike highlighted how CapEx has declined, but our sense that software spending was relatively flat in 2020, despite what happened. And, a lot of the spend is ERP, CRM, PLM kind of spend. So not necessarily directly on the manufacturing floor. But, what the software spend is supporting is the fact that one of the most powerful stories in U.S. manufacturing over the past 20 years has been significant margin expansion, despite the fact that you had a big offshoring trend in the U.S. But even though you didn't have growth in the U.S., the software investment enabled very, very significant improvement in profitability in U.S. operation over the past 20 years. As I said, as focus has shifted away from growth and more to efficiency. Interesting discussion to be had. What happens if we have partial reshoring? But software has been a very powerful story in driving returns. So look, I want to highlight that one of the things that we think is going to come out of this pandemic is energy sector maybe taking a much closer look at software and operating efficiency in general. So we ran some analysis, and I said manufacturing has been on this journey for the past 20 years. And you can see that manufacturing has been spending on intellectual property, consistently over the past 20 years, trying to be better. And the spend has increased over the past 20 years from under 4% to over 5% of total revenues. Oil and gas industry has sort of done something opposite, right? And you can see they were sort of spending when oil prices were very low back in the 90s, but as oil prices went up, spending collapsed, and only post this 14, 15, 16 price decline maybe went up, but once again, as oil prices recovered, relative spending has declined. You can just see the dichotomy between manufacturing and oil and gas industry. PP&E spending in the US is roughly similar, right? So these industries spend on CapEx, on stuff, roughly the same amount, but you can see while manufacturing industry spends, and this data is Bureau from Economic Analysis, spends 130 billion a year in the US on all sort of software investments. And as I said, if you hire Accenture consultants to sort of install it, that would be part of it. But what's remarkable is just how little oil and gas industry is spending today. And if oil and gas industry focuses more on efficiency and less growth, right, in this new post-pandemic world where we have more focus on green, it could sort of present revolutionary opportunity for the industry. The second thing I want to talk about is, and that actually has big implications for the strategy of the industrial companies, is how do we value software versus how do we value industrials? And generally, the framework that we use for analyzing industrial companies is something called EV over EBITDA, and EV is equity value plus net debt. So this is a sense if somebody were to take out, all the stock of the company and pay off all of its liabilities, what would it cost them? And EBITDA stands for earnings before interest, taxes, depreciation, and amortization. So what we're trying to do, we're trying to sort of straight line for various tax structures, the fact that some companies have done more M&A, less M&A. Think of it as sort of trying some sort of normalization metric that tries to assess cash flow. And what we divided, and on the x-axis, you have return on tangible assets. Once again, measure of income divided by tangible assets of the company. So it's if effectively we exclude goodwill here, and you can see that companies that have better returns, tend to have higher valuations. And what you can see on this chart is that we sort of have three publicly traded industrial software companies. You can see that these names have much higher multiples, despite the fact that sort of returns on assets are in line with best-in-class industrials. Why? So another component here is, and this goes back to the first slide, is that industrial software companies have enjoyed much better growth relative to industrial companies. And also they have very different characteristics, not only growth, but also how much cash flow they generate, right? Because these are asset-light businesses. So next slide, maybe too Wall Streety, but I'll just try to explain what it captures. So one of the valuation metrics that we look at is, as I said, enterprise value over EV to EBITDA. And think of it as just a fancier version of PE, multiple price to earnings ratio, that takes capital structure of the company into account. And then another metric that we look, all of you probably familiar with discounted cash flow. And discounted cash flow, at the end of it, you have to assign terminal value to your stream of cash flows. And what we do the reverse process. What we do is we look at the market valuation of the company, and we're trying to figure out, okay, given our forecast of free cash flows and given the valuation that the market is assigning to the company, what is the implied growth rate for free cash flow of these companies, and you can figure out, right, if the implied growth rate is really high, it means it's expensive. And if implied growth rate is very low, it's another way of saying, hey, given our cash flow forecast, this company is inexpensive. And what's interesting here is that we looked at the universe of multi-industrial companies, and these are the companies I cover, right? Uh, you know who they are. And then if you look at the average of the software companies, what's fascinating is that on the surface, industrial companies are much less expensive than software companies. So on average, industrial companies are trading at 15 times EBITDA 1 year out. Software companies are trading 30 times EBITDA 1 year out. At the same time, if you take into account free cash flow generation forecast for these companies, what you're finding out in growth forecast, what you're finding out that the market actually has lower longer term assumptions about software companies, basically thinking that the terminal growth rate is around 3%, why for industrial companies, terminal growth assumption is more like 4%. So this tells you that despite the fact that software companies appear to be expensive, actually the fact that they are in a higher growth area of the industrial world and the fact that they have robust free cash flows actually means that this 30 times multiple is actually less expensive than 15 once you sort of scratch below the surface. And once again, implications for strategy of the companies. So what we did here is that, let's say you're an industrial company and you want to sort of get into the software business by making a deal, right? So you can borrow or you can issue equity. And the bigger the disparity in size between you and the target, the easier it is to do the deal, right? So if you look at the market caps of large industrial companies that you're very familiar with, and we, just to keep it consistent, we looked at January 1st of 2015, something that we looked at last year. You can see the sort of the size differential between industrial companies and software companies. Industrial companies on average were quite a bit larger. Now, fast forward 6 years, and you can see that by and large industrial companies that we have in this sample, some have grown more, some have grown less, but you can see that software companies have grown much faster than industrial companies. And you can see while industrial CAGR, even for good companies, was low to mid, high single digits, low to mid teens, you can see that software companies did mid-teens to mid-20s. So let's look at the example. So let's say, and I'm absolutely using it as sort of make-believe example. And so let's say you are somebody like, I'm going to call out Emerson. No reason, right? And, Emerson has done a good job, kept up with the market, right? So their market cap went from 30 billion to 47 billion. So let's say they want to buy a company like Ansys. So if you want to do it in 2015, on a 30 billion, right, it would be you're buying $8 billion company. So that company represents, right, 25, 30% of your market cap, right? If you want to do it today, right, you have done everything right. But Ansys today is a $30 billion plus company versus $46 billion company. So 5 years ago, you would have been doing a relatively large acquisition. Today, a deal would look a lot more like a merger of equals, which obviously has very different implications in terms of what it means and ability to execute it, right? And, the other thing that I would highlight is that if you look at the difference in strategy, there is a difference in strategy between how multi-industrial companies in the US and multi-industrial companies in Europe have approached it, right? So European industrial companies have done an admirable job of building big both OT and IT businesses, right? But what's very interesting, and we'll talk about a little bit later, what's happening is that the industry is transforming, and we're moving on this perpetual license on-prem. A lot of things are moving to the cloud, SaaS. And look, I'm sure people will do a great job transitioning, but still it introduces a certain risk. And I also think it introduces an opportunity for US players who traditionally have been smaller than European players, who, as I said, have done an admirable job of building out the software businesses, right? But because the software businesses are built on legacy architecture, it's going to be very interesting to see if the US players will try to sort of play a role of disruptor and sort of go more directly to the cloud, skipping all this stuff in between, because that's what we're hearing a lot of customers have discovered during this lockdown process. And it's everything that Mike referred to, right? Need to collaborate, need to work remotely. So, so what's interesting, what are we seeing? So we are seeing what we did. We did a very interesting analysis utilizing a little bit of AI, frankly. So what we did is we looked at mention of digital cloud and SaaS, in industrial software company transcripts over the past year. So this is the period, Mike said, look, companies have really cut down on their guidance. So as they're not giving us guidance, it's fascinating. Look what they're talking about, mentions of digital cloud and SaaS. So back in the fourth quarter of 2019, and you have a list of the companies that we tracked, 80 mentions on collectively. In fourth quarter of 2020, you can see 470 mentions, right? So order of magnitude more focus on digital, cloud, and SaaS. And I think it does reflect the experience that we've had in 2020 with, what to do with the industry, what to do with the approach to software and which digital projects to pursue and how to manage digital transformation. We also host our own event in September. Now, our event, we're not competing with ARC in any way, shape, or form. In fact, they are one of our keynote speakers at this event. Our event targeting investors in the industrial space. And by the way, anybody who would like to participate as a presenter or wants to listen in as we do it in 2021, feel free to reach out to me. There's no fee because you're not an investor. But as I said, we're always happy to have ARC as one of the smartest presenters there. They add a ton of value. But look, these were the key themes from the event that we did in the middle of COVID. So first, definitely have contrasting approaches to digital implementation, right? Some people are pursuing open architecture, best of breed approach. Some people, modular pieces from a single provider, right? Pay for what you need. And then there are people who are trying to sell a whole system. So we still haven't settled on how to sort of deliver it to the customer. The second thing, and I think is going to be more and more important, the software as a service, SaaS transitions. And what's important here, there's a little bit of math that I'm going to give you. It's not on the slide, but it's very important to understand. So speakers at our event said that SaaS today represents roughly 10% of industrial automation software today, expected to reach 50% within 5 to 10 years, right? And look, speaking to the CEOs, we spent a lot of time speaking to CEOs. Look, SaaS native disruptors really pitch ease of use, and we do think that COVID has validated this view very much. So let's take the low end of the forecast and let's say, hey, 10 years for SaaS to be 50% of the industry. And let's say take the low end of sort of software growth, let's say 6%. So what that means is that the market today, let's say the market is 60 billion. There are a lot of definitions out there. Let's say the market is 60 billion today. That means that in 2030, the SaaS market alone is going to approach over $50 billion, right? So today the market is $6 billion. It's going to $50 billion. And it also means that SaaS is going to grow through this period of time at 25% a year, while the rest of software, right, is going to be effectively flat. So legacy software flat, SaaS growing at 25%. If we assume that this transformation takes place in 5 years, that means SaaS is going to grow at 40% and core business is going to decline. So core software business of these companies is going to decline and effectively represent a melting ice cube. So look, if you own a legacy business, that's a problem, right? So you really need to figure out what to do with your approach to digital implementation, how to go to the market, how fast do you sort of transition your offering to SaaS. And the other thing, like how are you going to do on as a customer, right? You also as a user, you need to figure out how am I going to do cloud, right? Cloud disrupting traditional data infrastructure and software like data historians, industrial IoT, how do I sort of deal with this real-time need for real-time control versus where to store it? And, cloud option, am I going to store on-prem? Am I going to edge? Am I go fully on the cloud, right? So as a user, you need to make this decision. As a provider, the decision is also quite stark because these cloud businesses, and this is where the markets play a big role. Look, these cloud businesses are valued very, very highly at 15 times ARR or revenue, the way to think about it. So think about it, if the cloud business becomes a $50 billion opportunity sometime middle, late decade, that's $750 billion of market cap potentially for whomever who can grab it, right? And it's not going to be a zero-sum game, but just understand that, the way Wall Street is going to value it, given where valuations are today, the SaaS opportunity over the next 5 to 10 years represents $750 billion worth of value. So I think that's why I think you're going to see managements really pay attention to developing cloud and developing SaaS. And look, if you look what evidence do we have in the channel, next slide will show you industrial companies acquiring software companies. What has the trend been over the past 20 years? And you can see this steady drumbeat really, really accelerating over the past 5 years. So the managements are figuring it out. And as I said, I think this whole SaaS thing introduces this extra layer. Clearly, you've seen people who have done a fantastic job building legacy software business. So you see them making large acquisitions, and you see everybody else sort of getting the memo, and other managements getting a lot more aggressive on software acquisitions. And the last slide that I have in my presentation, it's also very interesting. We used it last year. But look, it's a decision make versus buy, right? And we just used Facebook example, Facebook sort of spending money on M&A over the past decade. So look, they spend $40 billion on M&A. What's absolutely fascinating is that you can look at the number of transactions. It's a ginormous list, right? What's absolutely fascinating that it's really two deals that really made a huge difference. A, it's the acquisition of Instagram back in 2012. And B, it's their acquisition of WhatsApp in 2014. And what's interesting, our colleagues, Facebook today is worth $750 billion. And what's absolutely fascinating is that these two deals, I think, represent, I think, over 300 billion of the valuation of the company, right? And you can see, as long as you get at least one or two of these things right, it tells you that 50% of what they spent just doesn't matter. And it also tells you, like, you never know what works, and you have to do M&A to succeed, right? Because you just don't know what's going to work. And as I said, but when things work, they work incredibly well. And with that, I'm going to finish my presentation and turn it over to Mike. Thank you.
Thanks, Andrew. Really appreciate that. I always find it fascinating because of where we sit as a community. We don't often get a view of really how how companies are judged often and what really goes into that. So I always appreciate that fascinating look. I want to keep you here for just a couple minutes because I do have a few questions. One of the questions we'll get into in the panel, but I would like to get your perspective, the financial perspective on this. Let me just take a look at how to phrase this. So one of the things that we often talk about in industrial space is if you focus too much on digitalization, so you focus on technology, that it causes you to focus less on your core business and the business results. And that can potentially impact the bottom line. So how do you think, any guidance or suggestions for how industrials understand the balance of risk, of really looking, the comment of don't step forward into digitalization, you'll be out of business. How do they manage the forward-looking path in terms of technologies with the core business as is?
Yeah, look, industrial companies are risk averse. What's interesting is that this is what makes industrial companies actually very good investments over the past 20 years, because I think all the participants of this forum, just live this grind of sort of trying to get a little bit better every day, right? You live it, you live and breathe it every day. It's really, really hard. All of this makes cash flows and earnings of industrial companies very, very predictable. Doing digitization, disruptive, and acquiring companies in the software space, very, very expensive. I cover a company, I'm not going to name a name, but they've actually been incredibly successful in my personal view, in acquiring software companies and actually having a strategy for doing it. And the market has been punishing them for 2 years because market does not like uncertainty. So you do if you don't, you're damned if you do and you're damned if you don't. So what we have seen is that the way it works is that you really have to change your internal structure. So that's one, and sort of align IT and OT internally. Can't be sort of, it's just, because CEOs get really excited about this stuff. You go pitch it to them and then they sort of shove it down sort of organization. It just doesn't work because pieces of organization don't talk to each other. So you literally need to do reorg, I think, what we've heard, before implementing these things. So that's part one. Part two, what we have found is that being overly ambitious does not work, right? Because these organizations, these are not software companies. The culture is very different. So it's sort of doing these things piecemeal. So don't get overly ambitious. What we've seen works, sort of singles, maybe doubles, but focus on getting singles right. Don't try to sort of go for the home run. There is an example of a company that went for a home run, was way ahead of its time and just didn't end well. But it's doing it consistently in small pieces. And the final thing is that just set up these, what we've seen is just set up these gateways where, companies have a tendency of, you have a project, you come back and at the end of the year, and on mid-year you have your review and you give the results. So what we have seen works is gating the process, right? So you do it, check back after a month. You do it, check back after 2 months, just because culturally very different kinds of people do it. So just keeping communication, just micromanaging it, I guess, a lot more than you normally would. The final thing I would add, what works, is that companies that have set up software as a separate center, and what you do, you set up a software organization with a separate channel run by software guys, and you just leave them alone. You don't have sort of manufacturing guys dictating them what to do. And then you have other sort of issues in the company where you try to bring two together, but also letting software guys operating, particularly IT guys, operating at an IT speed versus OT speed. So that's sort of what we have found.
So somebody asked a question, and I think it's about a comment you were making on the way about singles versus trying to hit home runs. But it also begs the issue. It's kind of a chicken and egg of looking at that earlier slide. What used to be a single is now a home run. So how can industrial companies not destroy their shareholder value and hit for some of these maybe doubles, or that used to not be seen that way, and now they're so much more expensive? Anybody successfully handling that?
Yeah, I mean, look, I think it really is hard to figure out. So one of the things from a capital structure, what companies have done, there is one example where a company has separated into a software company and a hardware company, yet it sort of was the same, control structure. But it's sort of hard because software assets are probably the most valuable thing you have inside the company. The second thing, hard to do for a lot of people if you don't have the critical mass. Look, we've had these discussions with multiple CEOs. There is no easy answer. What I can tell you is that what we see is that you still look. I think the definition of a single has changed. Before, like 5 years ago, you could get a lot more for 100 million. You can still get a decent business for 100 million. The issue is like you've gotten now to a point where $300 million deal is a quote unquote small deal. And frankly, in order to sort of move the needle, you have to look at $1 billion deals. These companies are big enough, I think, to do a bunch of these $1 billion deals.
Sure.
And so it's not all is lost, but also I think organic becomes a lot more important. Look, if it was that easy, we wouldn't have a job, and nobody would have a job, right? Because if you could get onto a time machine and go 5 years ago and recognize how important it was. But 5 years ago, right, I think the issue with SaaS company, industrial SaaS, like that didn't exist. So look, like a big industrial SaaS company is, 50 million in ARR. That's a big industrial SaaS company. Like, if you look at the size of these companies, industrial companies, like 50 million is not a big business. So I actually think there are definitely still opportunities for organic growth as well. But that, I think, runs into big cultural issues inside the companies. That's
Yeah.
sort of.
Yeah. And I mean, honestly, if this last year has taught us anything, what is normal, and our definition of that is certainly changed. I want to ask you one last quick question, just out of complete curiosity. That statistic I put up there about the 40% of S&P 500 stopping guidance, I would have loved to be a fly on the wall in that boardroom when they decided that they were going to stop doing that. What was that like, being on the receiving end of that, not having the guidance? And then how did you see companies kind of get back into their groove and start to say, you know what, we can go forward, we can provide some guidance? And was there anything that was different about the companies that did it faster than others?
Yeah, absolutely. Thank you for this question. So look, I mean, that's why the market collapsed, right? The market does not like uncertainty. And that's why the market collapsed in March, April. And you had people sort of, putting out these numbers saying, hey, the GDP can collapse 10, 20, 30%. I don't remember what the numbers were. It was very, very scary. What we did, I can tell what we did, we sort of doubled down or tripled down on our efforts to do channel checks.
Mm-hmm.
And what became extremely important is actually communicating with executives, talking to them, trying to understand how do they deal with what's happening. And, look, the companies, we've talked to CEOs. One CEO I talked to, he would come into his office in Chicago at like, I think 3 or 4 a.m. in the morning, because he was literally micromanaging trucks going over the border in Europe. And the guy was sitting, he told me he was like the only person in the office. And I had this conversation with him at 5 a.m. And he's like, look, I'm the only one in the building. And he's on the phone with his operating guys in Europe trying to get trucks into Germany, right? So that's one example. Another example, Um, frankly, it's the micromanagers who did really well.
Got to do what you got to do.
Look, I mean, there was a big story about Dave Farr in Wall Street Journal. Huge, huge description of how he managed it. Once again, sort of micromanaging it and just being in the office, being on the factory floor. But as I said, sort of communicating with these guys was a big deal. You also definitely saw the difference in the systems. Companies with so it mattered how obsessive compulsive the CEO was about sort of the process. I think that made a huge difference. But also being very, very process oriented made a huge difference. And I think companies that had better systems before going into it, right? And it was like, once COVID hit, it was too late. You really saw companies with better systems just do better. So that made a huge difference. So that's sort of the answer that I would give it. But a massive increase in communication with the companies. And frankly, companies, it's sort of circular logic. If you had better systems, you had more data, right? You could micromanage the data, you could provide better information. So it all was sort of self-feeding mechanism. So that's how I would describe it. It was really scary. And as I said, you could see, look, the market reacted to it in March, April. And then sort of as information started to flow better, even without guidance, you could see market recovering.
Yeah, it's the digital backbone I talk about, which is not just the technology, but the people's capacity to use it. Their ability to be comfortable with change. Those are the companies that I saw personally. They weren't giving me financial guidance, but they were the ones that were telling me, yeah, we're going, we're good. We've stopped, we figured it out, we've reassessed, we're moving forward. Let's go.
I talked to a distributor, and they were the leader in installing SAP for distributors. I mean, they started like 15 years ago, right? And by the way, first 5 years of trying to do it was a complete and utter mess. But like the guy today has all the data at his fingertips because he's like into whatever third, fourth iteration of it. And, conversation with him because he gets, he can get all the data on his dashboard every night. Very different conversation, very different ability to sort of manage the business.
Well, thanks. That was a fascinating look. As always, I really appreciate your perspective. So thanks for being here. We're going to turn this over to the panel, so feel free to shut off your camera, stay a while, and listen to the rest of the folks here. If I could have Mike, Adam, and Laura join us, that would be great. Okay, there we go. So now we're gonna dive into the Q&A part of the session, and I want to introduce each of the folks here. And what I want to do is introduce them in order of their journey in digital transformation, with those on the front end first to those that have been at it for a little bit longer. So joining us today, we have Laura Thibodeau, who's the Chief Information Officer at America Styrenics, Adam Peters, Vice President, Electronics World Business Line at Air Liquide, and Mike Carroll, Vice President of Innovation at Georgia Pacific. So welcome, everybody. Appreciate you being here.
Thank you.
Thank you.
Thank you.
So the three of you present the spectrum of digital transformation. And Laura, I think you'd characterize AmSty more on the front end of the journey. Adam, I think you'd say you're somewhere in the middle. And Mike, Georgia Pacific has been at it for a while.
A while.
So given that, could each of you really describe your role in your company's transformation and discuss a little bit about what key initiatives your company's undertaken and why, with an emphasis on how did you settle on priorities? And if you could talk about one other thing, did last year change anything appreciably? And Laura, we'll go ahead and start with you if that's okay.
Sure, let's give it a roll. So we began this digital transformation really in 2013. And at that time, we were redoing our entire systems portfolio. We called the ball, I guess, early to say that we wanted to do a cloud first, a combination of private cloud, public cloud, and SaaS solutions for a lot of reasons. And as part of that journey, we digitized workflow, moved to contract management, a lot of things on the business system side. I would say kind of the next phase of that was looking at mobility solutions and what could we do in the industrial sector, kind of for rounds and warehouse management, those kinds of use cases. And then we moved into the AI and machine learning in our cyberspace. And most recently, we adopted digitization as far as our risk-based management, our move to risk-based inspections. So moving away from time-based inspections to the risk-based and really looking at the data, the quality of the data to understand, when does it make sense to invest? And so that's kind of been our journey. And then you had a lot of questions packed in there, Mike, but you asked, I think, how did we know how to prioritize, what part of the journey? And, I don't think that there's a specific cookbook on this. I think we're looking constantly at where's the hurt? Where is the greatest opportunity for gain? And so we're not digitizing for the sake of digitizing, but we're digitizing for the sake of this just makes good business sense. If you move from mountains of paper-based records, inspection records, to digitization, and you're able to actively utilize that data to, call the ball on when it makes sense pragmatically to do inspections and maintenance, it just makes good sense. I mean, you have less unplanned issues, and hopefully your maintenance costs are down and your unplanned situations are down. So, we really pressure test ourselves not to do innovation for the sake of innovation, but how can we use innovation to help us move better, faster, cheaper, safer.
Great, thanks. Adam, your thoughts?
Okay, thanks, Mike. So I want to just kind of give you a little bit of a context around our company, just so you can see how this digital transformation has been very interesting along our journey. Air Liquide is a large multinational. We're in about 80 countries, and we serve about 4 million customers and patients globally. So by and large, we are fairly decentralized, I would say, which can create some complexity in terms of digital transformation and the like. We're organized in 4 business lines globally, and I run one of those businesses. So my responsibility is head of our electronics business globally. I set the strategy for our electronics business, and I ensure that we are delivering on that strategy. Where it's complex, I would say, for us is that electronics represents about 10% of our global annual sales, but our customers are very global in nature. So if you look at our customers, we have on the order of 100 customers globally, 100 out of 4 million, okay? But there's some of our largest customers, and these are the customers, the semiconductor companies that are driving the technology that's enabling the digital transformation for everybody globally. So they set the pace, and it's a very fast-moving pace. So when I think about our strategy and where we want to go and how digital ties into that, it's taking a very fast pace set by our customers to materials companies like Air Liquide to drive towards things like ever increasing expectations on quality, on reliability, on business continuity, and really looking at this at a lower cost all the time. So when you talk about competitiveness and how that works together with regards to digital transformation, it's central to what we do, because if we don't adapt to the evolving needs of our customers, then we will fall behind very, very quickly and become somewhat irrelevant. So my role is to set the pace for this transformation within our company for our electronics business. Where it's a little bit complicated is that we have this business that is 10% of the total of Air Liquide, very global in nature, amongst a overall company that is largely decentralized. So we have digital IT data teams globally that are looking at the whole and trying to find solutions that work for Air Liquide. Those are not always at the pace, I would say, of what our global customers need. So what we're trying to do is bring that loud voice to our company to let them know what needs to be done very specific to our electronics business. I would say that we started our digital transformation around the same time as Laura's company back in the 2013 timeframe. I think we were a fairly early adopter of cloud-based approach for applications, for connectivity and the like. I think this works well with a company that has almost 65,000 employees. And I think it has become just the mainstay of how we operate as a business. We embarked on OT, I would say, around the same time frame for a segment of our business. And I would say over time, what we've seen is the importance of cybersecurity, the importance of operational technology and the like increasing, and how that applies to our electronics business in particular. So I would say as of late, and in particular to our electronics business, what we have focused in on is how do we set up centers that are specific to our electronics customers to help drive what we need to drive from a quality and a BCP standpoint and a data transparency standpoint for our customers in this space. So we have set up regional performance analytics centers in the past year and a half in most of the 8 countries that we serve our electronics clients. And we are moving towards adopting systems on a more global basis developed by companies in the ecosystem that are experts in this area. So around things like statistical process control and the like, to help us meet the needs of our clients from a quality standpoint and the like. Air Liquide's a very innovation-driven company, and I think in the past we've been a company that's tried to say we can develop things ourselves. I think we've realized over time that that's not the case. That just because we have some really intelligent people that are well-intentioned, it doesn't mean we're going to develop ourselves all the solutions that we need.
Yeah, fair enough. And Mike?
Yeah, so it's interesting listening to the other two panelists talk. We actually started a year behind them. We started in 2014, and we're very far down the path. And I'm responsible for the overall strategy of the company, and our journey actually started at ARC. And what you presented in your presentation kind of was written as our guidebook. If you look at the journey we went on, that could be our guidebook. And if you think about where we are today, we're in this position where we know that the IT, and when I say the IT, I mean the entire ecosystem of technology that connects our customers to the ecosystem that is the supply chain that we supply through and that we operate through. That is the critical infrastructure of our company. Mm-hmm. And that the concrete and steel that anchors our balance sheet is going to become as transferable as any other contract in that supply chain. And that mentality change in our company is a part of that entire process in that guidebook that you presented in that presentation. And I think this is a maturity that everybody goes through. And it's interesting, we talked about these priorities and how do you come to those priorities. And early on in that conversation about how you set priorities, the initial thing we talked about was how do we get intellectually honest about what's really at stake. And what's really at stake is when we looked at our performance and year-over-year performance early on, we saw that we were no better than the rest of the industry, that we were improving our performance. If you looked at it from a cost improvement as a percent of labor hour, it's 1% to 2%. And what was really driving that was the way we made decisions, the speed at which we made decisions, because we done a pretty simple analytic on the things that we had done. And what we found out is our ability to make decisions at a reasonable time that was driving that performance. And when we connected to that it was the way and the speed at which we made decisions, it changed our entire trajectory. And so no matter what your priorities are, if you don't change yourself in the way you make decisions, none of this digitalization actually matters, right? You don't really change yourself and you can't take advantage of it. And I think connecting to that first changes the entire trajectory, because if you look at the 3 panelists here, you started before we did, but we're significantly further ahead because of the way we started.
Yeah, it's like how it's almost that tipping point thing, like how quickly can people get to a launch point where they say what traditionally was good isn't good anymore. So we understand, we have some clarity around big things that have to change. Laura, I want to start with you here and then just open it up to the other folks. You discuss where you started to sort of bite some things off and go through the process of making improvements in the business because of the business need. How do you, because these things can go astray so quickly, how do you keep the organization's eye on the ball? How do you get leadership to be where it needs to be so that there's continuity, 2-3 years down the road in terms of what your objectives are and what you're trying to achieve?
I think that's a little bit a factor of the quality of the leadership team.
Yeah.
And, we've just not been one to chase the technology roadmap on a quarter by quarter basis, but rather on a, what does it look like 2, 3, 5 years out, and trying to call that ball. I do want to go back to something Mike said, and I guess there is a very significant parallel here, that part of that rebirth that we did in 2013 was all about that we needed to instrument analytics to be able to make data-based decisions, that we recognize that the quality of the decisions and the speed of the decisions prior to that retooling were insufficient. And that hugely galvanized us forward. And when we look at our performance and we track our performance, very carefully, not only against ourselves, but against our competitors. And one of the most significant things that really accelerated that was the retooling of our ERP system and the business analytics and the integrations to it. So Mike, I want to really thank you for that, because that was an important part of our journey that I really failed to mention. And it really did launch us into, I think, this current level of maturity.
Mike, Adam, any thoughts on that point?
I think, Mike, you and I have had a couple of conversations, and I think the journey that Georgia Pacific has gone on is quite impressive. When I look at what you've done in terms of really adopting this transformation and really making it, achieve the results that it seems to be achieving for you is really impressive. I think, sometimes it's funny, transformation. I think transformation itself, there's lots of ways of transforming. If you're redoing a house, for example, you can transform a room by changing the color, but it's not really that big of a transformation. You can also transform a house by adding an expansion, by moving a kitchen, by removing walls and the like. And I think the approach that you've done at Georgia Pacific, and I think that what we all aspire to do, is something much more transformative in terms of how it hits the very core of the decision-making process that you are using for the governance of the company and the like. So I think we are on that journey. We certainly have that aspiration, but I think it's hard, if I can say.
We felt pretty good about it. And then, last year I was at ARC and we felt pretty good about where we were. And then we all went home, and then COVID happened, and we all looked around at each other and went, what are we going to do? We actually made a list of what we were going to change that we weren't going to come back from, right? And that was going to be permanent. And it's interesting. We have made that change, and if it weren't for guys like Steve Clancy, our CIO, and the things that we had put into place prior to this, we actually went home, and were at least 20% better by going home, and nobody would have ever predicted that, than we were when we were all in the office, right? And who could imagine that you would have to turn off the badges at your plants and be 20% better by doing that than before, right? And just the realization that all becomes true, and then understanding why that's true, that you had things going on in your company that were interfering with running the plants, taking first place, and dissecting all that stuff made you an entirely different company that was still more transformative, right? Mm-hmm. And the intellectual honesty to accept that you had more to learn from all that, but that all the work that you had done up to that point had got you to the position that you were ready to just step 5 years ahead, right? And land on your feet and make use of it.
I think that one thing that's telling, I think, Mike, the conversations you and I have had, where even when you thought you were making progress, and I'm sure this isn't, for all three of you, even when you thought you were making progress, sometimes you would arrive at a place and you would say, well, wait a second, this is good, but it's not really there's something better, and we might not know what it is, but it's being comfortable with questions as a normal part of business. That gets, there's a question here in the Q&A that I think gets to that idea of sort of always questioning, what's this purpose? I just want to throw it out here. How do you see companies avoiding renaming their automation efforts as digitalization to fit with this idea of IIoT being so central to value these days? How do you break that thought process of, it's not modernization, it's transformation? And I'll throw that out to anybody there to answer that one.
I think at the core, it has to be, you have to believe that there will be value, significant value coming from it. If you don't, at the core, at the very top, believe that there'll be significant value coming from it, I don't see how you do any more than modernize. Mm-hmm. Because you'll look at everything from a cost standpoint. How much are we spending to drive this, right? As opposed to a value standpoint, what can we gain from it? And I think, I don't know, that would be my short answer to it, I guess.
Well, let me put something else out there then that builds on this. The three of you are leaders. One of the things I consistently hear from the folks that I talk to, they've been trying to convince leadership to do these things for such a long time, and they're put in this little, they're chasing their tail, which is, well, what's the value of that? I don't know. We've never done it before, but we know it's the way to go. So how do they break that? How do they stop chasing their tail? How do they get leadership to buy into these things that are valuable? Anybody want to step on that one? Probably a bit of a landmine.
I could tell you a lesson in humility I got from a board member at Alcoa when I asked him that question. He looked at me and said, Mike, I know you're dying to put this on a spreadsheet so you can calculate the value, but if you have to put this on a spreadsheet, you just don't get it. And that was a real lesson in humility. And what his point was, that there are risks to everything that you do. And if you don't understand what's at stake, you're not ready to go do this, right? Because you have to understand what's at stake in not doing this, in order to go do it, right? So you're thinking about it from the wrong perspective. And when we had that conversation in our organization, it didn't take us long to get connected to the fact that you either do this or you don't survive, right? And you hinted at this, right? In your guidebook of what you showed. The bad news about transformation is everybody's going to be disappointed that does it. Everybody's going to be disappointed, because the truth is, if you don't go get your customer in your ecosystem, you're not going to survive. If you just go do transformation from an operational perspective, you will be disappointed. And all the money that you save will leak out over time to those people that go get their customer in their ecosystem. And that's what you were pointing out in your presentation. And so you need to go start this journey, and you need to figure out how to go do this stuff.
Sometimes it just takes a leap of faith. It just takes a leap of faith.
What's at stake?
Yeah, I always I remember giving being involved in a discussion I think it was at AICHE a couple years ago, might as well have been a decade ago, where, it was pretty much, pitchforks and torches to the castle because of some frustration. And I do think that it's, is there any practical way that you can suggest that people can make that connection between the folks that have a lot of the intellectual property, are producing a lot of the value, and they need to get their leadership in a better place? Because you're right, Mike, Laura, it is a leap of faith.
The
But
rule of
often
thumb,
don't take that leap of faith because it's, they're on the line as a leader.
the rule of thumb that when you sit down and you talk to peers, and that's why coming to ARC is so valuable. And I hope we get to come again so we can sit down and talk one-on-one again, because you find out these rules of thumb. The rule of thumb it's called transformation. The rule of thumb is that transformation is worth about 10% of your gross revenue, right? From just an operational perspective. And that if you can go connect that to the customer, it's probably worth about another 10%. And so that's the value that's available to you if you execute this in a reasonable way. And so if that's not worth it to you, then you probably got another problem.
Yeah, I always think about a way to galvanize change is really playing on the fear of missing out. So, Mike,
Yeah.
This is something you've discussed. Laura, we haven't had quite these conversations yet. Adam, I've seen some of that with your company, which is if you go outside of your normal comfort zone and you find people that are innovating, it's much easier to shine that light back inside and say, these are the things that can be done. I want to talk a little bit about something I think all three of you touched on. Just see if you can expand on it a little bit more. And Adam, I'll start with you here, and then maybe jump over to you, Laura. It's that push-pull of transparency and speed of decision making. So when you want to be faster in terms of how you are able to react to your market or prepare for what you think your market needs, and to be in tune with your market, you have to have a much better and more transparent understanding of your value chain. And Adam, you talk a lot about, I've seen instances of you bringing in components of that value chain much closer to you. And in doing so, you have to be more transparent to your customer. That's going to require your providers, all types of those different providers, to be more transparent to you. Can you talk a little bit about how that happens? Because I'm sure some of those conversations can be a little difficult initially.
Yeah, I think, so let's see here. If I look at I think there's probably two avenues to look at. One is our customers always put very openly a lot of pressure on us to come with them. So they're pulling us along the way. And we rely a lot on the full supply chain, that we're not always, soup to nuts in that supply chain itself. So for example, I'll give you an example. On the, if I look at in our materials business, we buy raw materials, we transform those raw materials, and then we end up packaging and selling those raw materials. If we don't have good communication, clear expectations set with our raw material suppliers, then ultimately it can find its way through to a problem at our end customer. So making sure that we have clarity and good connectivity with our raw material suppliers, and making sure that we have the right tools, I would say, and the right approach to make to have that data collected and utilized in our decision-making process all the way through to the point where we deliver to our clients, I think is very important. Now, it also comes back to, I think, global consistency in our approach. If every one of our affiliates did something different themselves in terms of how we wanted to approach this, then we would serve the same client differently in multiple locations, right? We would provide them different information. We would provide them, in some cases, in a lot of cases, I would say, not what they're looking for. So driving that consistency requires us to have a more global approach to the solution that we take, which takes into consideration in the ecosystem, bringing in solution providers that can help us in the areas that they're experts. So in like statistical process control, for example, Northwest Analytics is a company that's helped us out. There's other companies along the way that we look at too. Now, I would say the solution provider itself it's not a panacea. This by itself is not it. It also requires us to have a lot of confidence in our data governance, in the data itself, to make sure that not only is it the tool, but it's the data and it's the governance around that makes for a end-to-end solution that can work all the way to our customers.
So before I jump over to you, Laura, just one quick thought to finish here, Adam. So when you know that you're not going to, how does tolerance for maybe not getting it right initially, but having to iterate through things, have you changed? Has your organization changed with their perspective on, listen, we're way more out in front with our customer. So if we screw up, it's a bad thing, but there's maybe an understanding that we're working through this to get to the right answer. What does that look like? Or is that the way that it's thought about?
I mean, I think, I can tell you that we've been in scenarios where things go very well and our customers very much appreciate it. We've had issues in the past where our customers bring everybody in to myself, up to myself to basically have the,
the conversation.
Exactly. So that right there is a very important reminder of how integrated we are with our customers. And I think this comes to the point that Mike made about bringing our customer into our ecosystem. Because if they're not part of it, we're going to miss it. We can't do this in a vacuum.
Yeah, Amazon's taught the world that. I wonder if they're paying attention.
So Laura, you wanna weigh in on that one, because it sounds like you actually have a leadership group that's pretty galvanized, pretty purpose driven. So can you give your thoughts about?
Yeah, I think that's right. But I was going to just really kind of say, I appreciated the question and your leading remarks in this space, because one of the retrospectives of coming out of COVID, and COVID, caused a lot of changes in demand signals and, therein, we began an introspective, and I'd say it's really kind of following also on what Adam said, which is how do we better align that voice of the customer, that demand profile, with our feedstocks, situation, supply and cost and everything therein, and that manufacturing capacity and the revenue projections. I mean, what was good enough pre-COVID wasn't good enough, during COVID. And yeah, we got by, but we said, we're not happy with that stance. It's not good enough. And so it forced an introspective that, I think we're retooling some things. And, I really liked how Adam said that, but about really realigning that voice of the customer, the feedstocks, every piece of that value chain, to make sure that we really understood the cause and effects, the levers, and the impacts therein. So, we thought we were in pretty good shape. We felt, coming out of COVID, or we're not out of it, but, just even doing our early look backs going, no, we need to do better in that area. And so, that's kind of our story.
Yeah, well, let's talk about maybe the fallout of that a little bit, which is change management and the effect on people. So a couple of thoughts there. How, when you went through something uncertain and you maybe didn't have the definitive metrics and results, and you had to sort of work toward them, how quickly were you able to get measurements in place that made you feel like, yes, we've taken the correct step forward? And then how do you deal with the Pandora's box that has to be open, that is the impact on people and the impact on workforce and the value that people have to feel to help you through this particular change and the achievement of those metrics that you desire? And I'll throw that out to anybody there, because that's a tough topic sometimes.
Well, metrics are really hard because, you don't want to set the wrong metric, because it will incent the wrong behavior. And sometimes you don't realize what the consequence of that metric could be. You could never foreshadow that. And then it plays itself out. So, I think as a collective, we try to set, very thoughtful metrics, but we reserve the right to continue to evaluate and to change. If like I said, sometimes you just don't see those unintended consequences. Measuring data is good. Measuring results is important. But you got to then look at what behaviors it's driving um, and reset. And I think you've got to be humble enough. You mentioned, that, humble. You've got to be humble enough to say, hey, we did our very best. We set a goal. Um, we made that goal. We need to improve to our next level of maturity, and we need a new set of goals to get us there.
Mike, Adam, anybody want to add it in on that one?
So the very first thing we did was, it seemed like we all went to work in 7 days a week, 16 hours, 20 hours a day. And in that consumer product space, in that building product space, that was absolutely necessary because of demands in the market. And we spent a lot of time communicating. We already had most of the transparency measures in place. And as you know, if you want to change behavior, make things transparent, right? And so we spent a lot of time getting folks connected and communicating with the entire leadership team. And one of the things we needed to get past was what you would call flyover country in our organization. Is that in the past, earlier on, we had this tendency that senior leadership team would decide to go do something. You'd run straight to facility. You want to put something in place at facility, and you'd never do anything with the middle layers of the organization, assuming that would all come into play, and you never put into place the things that you needed to sustain the change you wanted. And we made sure all those things were in place, and we made a conscious effort to really over communicate. And I think the organization done a wonderful job, because for a while it seemed like we were in a Roadrunner cartoon where you step out on the rock and the cliff falls away, right? And it was that strange, everything that was going on. And I think in the same sense that Andrew said that those people that micromanaged were the most successful, when you look at the number of hours we put in, that's exactly what we were doing. And I think because it was so different, that's what we had to do, right? And it worked for us. And we were taking care of business if you actually boil it down to what were you doing. And out of that, what we learned the things we actually needed to do. And what we did was we created all these regional virtual teams that were a necessity, and we got people connected through this technology, and we done it in literally a week, right? And then we started practicing, and now we're so good at it. What do you do with the real estate now? That's a great question.
A lot of companies.
Yeah, I just want to change, amplify one thing that Mike just mentioned: the resilience of the human spirit. Yeah. And what was really, really amazing during this COVID is, despite how difficult it was for people and their families and their children and everything like that, they gave 125%.
Unbelievable.
to keep our operations running. And if you look at our transaction rate in SAP, it's just a very simple, indication. We were 20 to 25% higher than we were before sending everybody home. So people were working a lot of extra hours, on their own. They were really digging in to help us pile out of this little situation. And, I think that we just can't thank our people enough, that human resilience, that human spirit, that, we're going to survive as a team. It really, I think, propelled companies forward, and I think great companies forward, those that had the right leadership team and that had been fostering that spirit of work together. I think that was really a shining light that came out of, kind of a very dark period.
Absolutely. So let's stick on the topic of people, because Laura, you gave a great springboard into that. I'm a big believer in the strategic process of starting things with the question, what if? And asking the question, what if, allows you enough space to start to define how you could really truly change the things that you're doing. However, you have to have the right people in the room to understand the what if questions. When you think about this transformation, and put the technology aside for a minute, how do you make sure you have the right minds in place? How did you put teams together that may have to eventually go off and execute incredibly tactical things? Can you give me a little insight into how you put your teams together?
Mm-hmm. Yeah, I mean, I'm just thinking about this move to the risk-based inspection, like that we were just talking about earlier in the program. And, one of the things that I'm very proud of is that we involved, every level of the organization, and we let the people bring the gifts that they knew. IT has a very strong technology bent. How do we do the cloud? How do we do the integrations? But that guy that knows the inspections best needs to help us understand what is the rule set. And so each person along that, it wasn't a tops down initiative. It was a team initiative where, I think that the reason that we were successful is because everyone came together and offered, what they could about how to get us to that vision. And we had someone who kind of, served as that kind of coach to kind of, even challenge us to say, is that enough? Could we do more? What are those metrics that we would like to aspire to? What are those metrics of what is the best of industry? Let's not set ourselves, too small of a bar here. And so, I'm kind of going back, Mike G, not Mike C, I think it's the power of team and making sure it's not a tops down initiative, but, a collective initiative. And that we really use the voice of each of the people that are impacted to make sure that the technology that we introduced is the right technology, that it's the right decision based, that we're working with it and not against it.
Adam, Mike?
Maybe to kind of build off that, I completely agree with you. You think about the ecosystem, and the ecosystem being the overall value chain. Even within the company, the middle management, the frontline employees play a key role in making sure that they drive the right level of ownership, bring the right information to the table to make these things happen successfully. I've seen, like, to the point that Laura raised about, the team working together towards this common solution, I think is super important. I think that's been a key indicator of what has driven successful projects. And when we haven't done that, it has not been so successful. So we definitely have enough experience, I would say, over the last 6 or 7 years, where we've seen some things that have worked very, very well in terms of transformative initiatives. And we've seen other ones that have not. And I think when it's purely a top-down driven initiative, which is sometimes driven by, the most simple of things, which is a tool, for example, then I don't think that they get adopted very well, and they don't work by themselves. So it requires the whole of the company or the whole of the team to make it a real success.
Yeah, spot on, Adam.
So, I want to end here on this note. The thing, I think both of you have talked about it, and I know, Mike, you've mentioned as well. It's the idea that if you know you're going to go through change, Laura, you said that when you had change, you brought people to the table that then had purpose. And to me, when you have purpose in an endeavor, even if there's change, that purpose gives you value. And that's so important to human beings. And you've seen it all through COVID this year. It's been incredible where you reorient people around purpose. They understand they have value to the organization, and they feel very good about carrying out their mission. So I think that is a tremendous statement in the disruptive nature of transformation, for sure. So we're going to now, I think, take a short break after this keynote. Then we're going to have another set of sessions coming up in 30 minutes, and that's going to begin at noon Eastern time. And we're going to cover IT/OT convergence, sustainability, workforce diversity, and cybersecurity. So what I would love to do is just thank everybody today here for joining me, Laura, Mike, Adam, and Andrew as well. It's been a tremendous conversation.
Yeah.
I really appreciate the time and look forward to having a great rest of the forum. Thank you very much.
Take care.
Thanks, everyone.
Take care.